For commodity exporters, the pandemic has impacted most commodity prices negatively as a result of lower demand. Oil prices have been particularly hard hit due to the simultaneous demand and supply shocks. When oil falls below this fiscal break-even price, the government needs to either increase oil production, dip into its reserves, or borrow to survive. This will force painful spending cuts, just as leaders hope that their economies were recovering from the 2014-2015 oil price shock. However, other countries are not as well positioned, and we can look at places like Nigeria, Bahrain, and Oman for those that will be particularly vulnerable. There are also vulnerabilities that we see for several Latin American countries, including Venezuela as well as Ecuador. Given the large number of people employed via the service sector, there will also be wide-ranging reverberations in the economy if the unemployment level rises. We see regions with the most exposure including countries in the Caribbean, Europe, and parts of Asia and Latin America. There is concessionary funding available, but if the country does not completely cover a country's financing needs, they will need to issue debt at less favorable terms in the open market. However, existing high levels of debt will make it more difficult and costly for these countries with lower sovereign ratings. Additionally, tighter financial conditions and the risk aversions lately to emerging markets could prove to be a major challenge for the countries to issue debt in this environment.